Also with us is Michael Yoshikami, the Chief Investment Strategist over at YCMNet Advisors. So, Michael, let's kick it all off with you. We've been on quite a winning streak when it comes to stocks. What do you think of the move up? We're headed for another week of gains, the 6th week of gains, in fact.
I think the move is very reasonable. I know that some are concerned that the market's getting overheated, but frankly, despite the fact that the economic news without stimulus, as I just heard one of your previous guests talk about, is likely to be weak, there still is going to be economic growth. And I think that it's surprising many of the doomsdayers, but I'm not surprised the market's moving up. And frankly, from here, I see it continuing to move up during the course of the year, as long as we don't have a double dip, and we just don't expect that. Not
to mention that we've got a low rate environment, and for the time being, it looks like it's going to stay that way, at least according to what we keep hearing from the Fed.
Yeah, I mean, the low rate environment helps, obviously. Businesses are more profitable. It helps consumers. And frankly, another thing that's really helping is the weak dollar. The weak dollar is helping with exports. And if exports continue to pick up the slack from a slow consumer, I think the economy is on track to recover.
Do you expect a continued slow consumer? I mean, we had some great numbers in March. Lincoln obviously says and points out correctly so that they come off of horrible numbers March a year ago. But a lot of people, Gilbert Harrison told Mark Crumpton yesterday, the consumer is back.
Yeah, the consumer's back, as indicated by savings rates, which are now really capping right now about 5%. Some had thought it might be 8, 9%, which would have been a pretty significant drag on the economy with that much money taken out of the marketplace. But I think the consumer's going to be back. But if you look at the consumer to where they were, say, 2 years ago or 3 years ago or 4 years ago, they're not back there. They're just back from the dead, which is what they were doing a year ago.
I got to go back to the Dow, 11,000, because you guys know that tomorrow, the front pages of the Wall Street Journal, the weekend edition, all the papers are going to say Dow 11,000. Michael Yoshikami, let me bring you back into this. I mean, it is just another level, but nonetheless, we've had quite a run from those March 2009 lows. I know we were oversold at that point, but at what point does it become a little heady for you in terms of the equity advance?
Well, it's not heady yet, and I think the 11,000 number from our perspective, from a behavioral perspective, is actually important. You're right. The newspapers are going to say 11,000 Dow, and there are a lot of individual investors that are still on the sidelines. I mean, we see this as we manage money. We run across folks all the time that have had all of their money in cash since March of last year, and now they're looking at the market advancing, and they're saying, what's happening? Am I missing this? So I think 11,000 is going to give some encouragement. Might be a little late to the party, but give some encouragement to some of that money that's on the sidelines to move back into the market. So I think the headline does have an impact on investor psychology.
Hey, next time around at this time, 1 week from now, we're going to be talking a lot about General Electric earnings, always a closely watched report. Michael Yoshikami, I mean, that's a big number. We do get Alcoa. What are your expectations for earnings?
Well, for General Electric, I expect them to start surprising. I think that the gloom has been very, very significant on GE's finance business. And while they certainly have problems, if you look at sum of parts, the sum of parts of GE is so much more. They're just really being beat down because of the financial services. So I expect it to be a pretty good number. I think it's a pretty good bellwether for a recovering economy. I think that's what's going to happen with GE. Alcoa is hard to say. Alcoa certainly has been disappointing. But I do agree that, just generally speaking, the commodity story is still intact. I still think you're going to see a resurgence in the consumption of economies. I think China is going to eventually start getting back to the kind of consumption they had before. So I think generally commodity stories, Alcoa may be one, but maybe even direct investments in commodities, I think that makes sense for portfolios.
Michael Yoshikami, why aren't you more bullish? I mean, with the jump in earnings expected again this quarter, with the consumer seemingly coming back, at least from the March numbers, with the jobs picture looking a little bit better, you say we're going to have a slow recovery but no double dip. That seems a little bit tepid.
Well, maybe. I guess what's a strong recovery?
It's all relative, I guess.
Average GDP growth of 3%. I'm definitely bullish. There's no doubt about that. I'm definitely bullish. I just believe that the economy, when you take out the stimulus, is not going to grow as fast. And I think people should not get too excited to look at current GDP numbers as if those are the real numbers when we have all this borrowed money flooding into the system. So I remain a bull, but I think people need to buy good quality cash flow companies, dividend-paying companies, and don't put all your money in stocks. Buy commodities, buy some fixed income, even look at things like REITs. Gold, certainly. I think those should be part of portfolio strategy.
Michael Yoshikami, got 10 seconds here for you.
I don't agree also. I think that the market momentum is upward. Frankly, any given day there could be something that could blow the markets out, but I think that the news is getting to be positive, more positive. The economy is recovering, so I think we're moving in the right direction upward.
All right, guys, we're going to run